Hello, everyone. Happy Thursday. Although I'm sure it won't be Thursday as you're watching this, as I'm recording it at 11:15 at night. But whatever day it is, happy day. I wanted to get on real quick and talk to you about a new indicator that I've really been studying, that I've seen some pretty hard data on. A lot of examples showing the legitimacy of this particular indicator. It's similar to the squeeze indicator we talked about last week or whenever that was, but I actually like this one, I think, a little bit more. Um, it's called the MacD, standing for Moving Average Convergence Divergence. Has a lot to do with the overall trend of the stock on the market for the 200 day moving average, and it's got a lot of similar triggers about some converging volume versus converging volatility and whatnot. So let's just get into it real fast. If you go to tradingview.com, your indicators, you'll just search MacD. It's this MacD custom indicator. Here it's got like 52,000 some likes on it. That's what you'll want to use. I'm not sure why it just went to Chris Moody. Apparently I clicked something I shouldn't have clicked. I clicked his name. Don't click his name. So I just added that to the chart. And this is what it looks like. A little bit to take in at first glance, but ultimately it's actually pretty easy to see and to work through. What we're looking at here is you have what's called the MacD line, which is this line that changes from, actually it's the yellow line, I think. Let me look actually real fast. I think the MacD line is the one that changes from red to green. Yeah, your MacD line is the red to green line, and your signal line is the one that you really want to pay close attention to. So, your signal line is always going to kind of flow, and the main trigger here is what your MacD line does in reference to the yellow signal line. First of all of the scenarios that we're talking about here, when we're talking about buying a stock with the preference of it going up and us making money. So we're not shorting a stock, we're not really making moves on stuff going down. You're going to want all of your purchases to be when the crossover of these two lines occurs below the zero, below the white line here. So the first thing we're looking for is for the MacD line, the red and green line, to cross above the signal line. And it's right here indicated by this green dot. Let me zoom in a little bit. It's indicated by this green dot. This is the example I wanted to use. So you've got both below the white line, the zero line, and you've got a crossover, the MacD crossing above the signal line, indicating green. That's what's kind of nice about this visual, is that the colors and stuff can get kind of confusing, especially if you're partially colorblind. But the green dot or the red dot kind of takes care of the whole buy-sell thing. So what you have here is you have a good crossover showing a buy signal. We're below the white histogram line there at 0. And the last thing we want to do to kind of clean this up is we want to add in the 200 EMA. So we just added in the 200 or the EMA. I'm going to favorite that. I'm going to go to settings here, get rid of the 20 and the 50. We don't need those for this. I'm going to make the 200 EMA bright yellow, full opacity, full thickness, really make it pop on the chart. It's just a little bit more visually pleasing. So the last kind of indicator we're looking for here, or criteria, before we trigger a buy on the green dot, is that the current trend is trending right on or above the 200 EMA. Now, Apple might be a bad example to use, just because Apple has pretty much always been going up throughout its whole history. As you can see, not very many downtrends. You don't see Apple below the 200 EMA very often, but that's also a good thing. If you're ever in a market where it's approaching the 200 EMA again, you can have pretty good confidence knowing that it's going to hold support there. And this is where it's at currently, and I'm actually kind of interested in getting involved here, and I'll show you why in just a second. So back to the MacD basics. You've got kind of your 4 criteria. You've got a crossover, signaling green. It's below the white line, and it's either trending right on or right with the 200 EMA or above it. That's kind of that's pretty much it when it comes to setting up your buy. I think I'm going to talk risk reward in a different video and how we can really maximize getting into the risk reward aspect of placing trades, so that even if this MacD strategy was a 50-50 success rate, we'd actually still make money in the long run. So that's pretty much it on the MacD. Pretty straightforward, nothing complicated as far as the visuals are concerned, and as far as when to trigger. Below the white line, we got a buy signal with the MacD crossing over the signal line, and we're trending with or above our 200 EMA. Now, to add more confidence and to kind of set basics on where support and resistance is, to make our buys more confident. We want to be able to place orders knowing that whatever time frame we're in, we're feeling pretty dang good about what we're doing. So you want to set up a couple layers of support or resistance. In this case, we can take a pretty quick, easy look, and I'm on the daily chart here. You're going to want to look at the big picture first before you go down to a smaller picture to place orders. On the daily chart, you can clearly see that we have a decent level of support here, where it's been tested multiple times, and every single time it's had a bump above and stayed above it. So what we want to do is come over here and draw a rectangle. And we're not going to do a line here. We're going to do a rectangle that pretty much touches the furthest north support that's still in the same ballpark, and touches the bottom of this support here. That's kind of the zone we're looking at. So, Apple has support in this general area all the way over here. What we also want to look at is see if there's any more repeated touches here. We've got a little bit of a touch here before it went back down. Let me zoom in a little bit so it's a little bit more, oops. Yeah, I didn't want to do that. Just so it's a little bit easier to see. We've got a little bit of a zone here. We can see that little bit of the zone there. Also here and here. So we kind of got two different zones where if top zone fails, we've kind of got like a backup zone for support purposes. Let me change the color on this one. Oh, that's not what I was hoping for. There we go. All right. Apparently I really like yellow on these charts, so let me switch it up. Let's go green. Don't mind me while I play with paint, okay? Let's go vibrant green. Let's also fill in this purple a little bit more. All right, so this is live. This is Apple currently on a daily chart, and you can pretty much see pretty easily why I'd be interested in keeping Apple on my watch list. Now, don't get me wrong. I know it's an expensive stock. I know that several of you don't have as a big of a trade account as I have, but ultimately we're looking for percentages here. So if you can get 10% off Apple, 20% off Apple, it doesn't really matter. 20% is 20%. Risk, loss, reward, setup. If you're winning, you're winning. It doesn't really matter. Obviously, the cheaper stocks are a little bit more attractive because you can get more shares. And let's say that it goes up $1, you're going to make way more. But typically, right now, I'm looking for wins that are attractive and I can be confident about to build confidence in the market. Ultimately, I want to build a strategy. Kind of doing a reset after this hard week, this crazy week in the stock market where it's been frustrating many days when you strategize out a plan and it just seems to fail because the market's just quirky or you got GameStop or whatever's going on. So if it means finding a more dependable stock like Apple and taking advantage of when it has dips because you have a pretty solid idea that it's going to keep going up, I think it's worth it. I think it's worth maybe making a little bit less green to make more green in the long run, if that makes sense. So here we've got our 2 levels of support that we have over here. Again, the green got 1 point of touch here, 2 points touch here, and a third one here. This purple, you got a gap up showing support. You've got resistance setting it back up, or again, not resistance, but support setting it back up, and then support again for a third time. So pretty easy to see these 2 areas of support. I don't really think I'm stretching it much at all. And of course, our last area of support being this 200 EMA. I mean, if you look at it, Apple has a very, very consistent history of bouncing down to the 200 EMA, bouncing back up, bouncing down, up. This is probably one of the times in its history where it was down the most. But if you look on the chart, there's honestly not a ton in the way of common points of resistance or support. You kind of have some here, 1, 2, 3, maybe another one here that you could extend across, and you can kind of see that the stock stopped there at one point before it continued down. But that's the point of setting up a stop loss, so that if a fluke thing like that happens, you're out with your maximum loss, but it's still a small loss. So here we have the 200 EMA approaching the stock as it's coming back down, right into 2 different levels of support for this. I'm pretty confident, and I'm going to watch this one closely. These are daily candles, so we've got probably a couple days here left of let's see here, of Apple continuing down. But I would think that right over here in this region, right around the beginning of March, so next week sometime, we could see Apple taking a reversal going up the other direction. So I'm going to keep a pretty close eye. Plus, you can look down here in the MacD and see that it's heading back down below this white line, which obviously is critical for our MacD setup. So this is really attractive to me. I'm going to add Apple to my watch list. Even if I don't get in on it, I'd like to see it play out. And just kind of treat it as a one of many test cases. So keep this in mind. This is a pretty general setup. What we're looking at for the MacD stuff. I might do another video here shortly about risk reward specifically, just so that one video is not too long. But if you have questions about MacD or how to set up areas of support and resistance, just let me know, and we'll find somebody else who knows the answer. All right. Hope you all have a good night. See you.